Hey, welcome to the 40 Finance channel, everybody. Going to try out a new format. We're going to call this FINTWIT Friday, where I share with you some of the more interesting and insightful tweets that I've read this week on social media. These are all related to stocks, finance, the economy, etc. All right, let's jump in and I'll get into my top 5 tweets of the week. All right, first one here comes from Value Stock Geek. And I thought this was pretty insightful. Median home price in 1990 was 126. Median today is 408. Average 30-year mortgage rate in 1990 was 10%. Today is 4.16. 1990 mortgage payment, 1137. 1990 mortgage adjusted for inflation, 2486. Mortgage payment today on today's median house at today's average rate, 1986. Then he goes on to expand on that. From 1990 to today, the growth in housing prices is a 5.72% CAGR. Per capita GDP was 23,868 in 1990. Per capita GDP today is 72,000. That is a 5.41% CAGR. Housing price increases are largely in line with the increases in income. Additionally, rates are lower. The popular narrative that real estate is out of control and out of reach is off base, I think. There are markets outside of New York and San Francisco. So there's a couple things to think about there. I'm largely in agreement with this assessment. We'll see how it plays out for the rest of the year. All right, number 4, we got special situations. 1 week after calling them uninvestable, JP Morgan says Chinese stocks are a buy. You can't make this up. They don't think tail risks materialize. A few days after going ballistic about tail risks, this is the kind of about face that you see constantly on television, so I thought it was pretty entertaining. Chinese stocks did come down a little bit today here on Friday, and I think a little bit yesterday too, but they certainly bumped up from the all-time lows that we saw just a few weeks ago, as the government has insinuated they'll do everything they can to keep those shares on the United States stock market. All right, tweet number 3, this comes from Carl Cantanilla from CNBC, apparently from an interview with Fundstrat. I assume Tom Lee, but I don't want to say that. Cass Freight Shipments Index has rolled over hard. It's now negative year over year. Cass Freight leads CPI by 6 months, meaning we think CPI risks roll over to downside in the second half of 2022. Hence, again, we think inflation risks break to the downside. Now, I'm certainly not an expert in Cass Freight Shipments, so I'm going to take it for what it's worth, and this graph for whatever that's worth as well. But interestingly, down here, this business owner has said we see that already in our business. Both air and ocean freight are down some 35% in early March. If these lower prices hold and even further come down, then we should see product-related inflation easing. So something to keep in mind if you're getting nervous about product pricing inflation. All right, the number 2 tweet of the week, and I thought that this will get your head turning a little bit. Barry Schwartz comes in and says, if Netflix charges $3 extra to share the password, isn't this going to be like 100% margin with next to zero customer acquisition costs? And I think he brings up a good point here. Let's just say I was sharing with my children who are at college or something like that, and all of a sudden Netflix asks me, hey, we're going to turn those off. Those 2 kids you got at college, we're going to turn that password off. Or you can keep it on. Let them have at it. Just add $3 a month. I think in many, many cases, well, particularly within the family structure, they're going to get that extra $3 a month. All right, and tweet number 1 for this week. It actually started with a thread from Michael Antonelli, who's bringing up the point that a max of 40 individual stocks before you lose benefit from further diversification. He was talking about, obviously, like crafting a portfolio, but what caught my eye was this reply here from Kevin Frizz, who says, what would you guess is the number of stocks in the S&P 500 that beat the index on average in a year? I.e., how many of the top 500 do better than the overall? I thought that was interesting, and in my mind, just randomly, I would have said like 50. 50 out of the S&P 500 go over the S&P index. I just figured that the top 10% produced 80% of the gains. That was, just where my mind went. But he answers it down here, and I did not check this data, so we'll just take his word for it. He says in 2021, 244 of the S&P 500 stocks beat the index. 2020, you had 188, obviously a very weird year with COVID. But you get the picture if you look down to 19, 18, and 17, all in that kind of 250 range. So while that seems like the obvious choice, half the stocks outperform the index in the S&P 500. What's interesting to me, if you want to look at that a different way, you could almost throw darts at the S&P 500. You got a 50-50 chance, and probably better than that if you follow the market, of outperforming simply by having a portfolio that's mostly the 250 that outperform. So very interesting stat for the week from Kevin Frizz. All right, bonus tweet here from the side of comedy. This person, Bedouin, shares a quick check-in on Reddit, assumingly the WSB thread. I own nearly $500,000 in capital gains tax for 2021. Obviously, it's tax season right now. However, I lost all of my money at the beginning of this year during the stock market meltdown. What can I do? Is it possible to use my losses to offset the gains, even though it was from 2 separate years? So some hard lessons being learned during tax time for some of these younger investors, assuming this person's young. I say assuming because if you didn't know you paid capital gains taxes on the stocks that you sold, then it has to be one of your first few years in the market. All right, guys, so those are my top 5 tweets for this FinTwit Friday. Let me know what you think about this format, if you learned something new here today. And before you go, look down the description for a special offer on Seeking Alpha Premium with my affiliate link. If you're interested, 50% off a full year of Seeking Alpha Premium. And as always, please give the video a thumbs up, share with your friends. Appreciate all your support. We'll see you on the next video.